Good morning. Welcome to our E3 Weekly Market Report. The date is August the 20th. I'm Pat McClatchy. Exports have just come out. Just to give you kind of a layout or the format for today, we'll talk about exports. We'll talk about crop conditions. We'll go over some recent price movement and kind of look at what we think the future could hold. And then we'll just talk about why are commodities so negative. Looking straight away now at the numbers that have come out. Let's go to cotton first. We've got sales of 52,800 running bales. That's, let's see here, primary destinations: Turkey for 13,100, Mexico for 12,900, Costa Rica for 12,600. We've got some cancellations. Morocco canceled 37,100 running bales. The 2016-2017 sales were 2,400. Looking at the reaction of the market, cotton was down at the time this came out. Right now, cotton is down. Cotton was down 9. Right now, it's down 22. Going next to soybeans, the soybean numbers: 46,000 metric tons for 2014-2015. That's down 52% from the previous week, but up 27% from the 4-week average. Increases were reported for the Netherlands with 75,000 metric tons, Thailand 30,000 metric tons, and Mexico with 27,500. Some cancellations: 89,700 from unknown destinations, as well as China canceling 66,000 metric tons. Okay, looking at soybeans, unchanged on the day before this report came out, and right now we're down 1.25 pennies. Corn, net sales 282,700 metric tons for 2014-2015, up noticeably from the previous week and 84% from the four-week average. Increases were reported for Japan with 166,300 metric tons. We have Mexico with 89,000 metric tons and Peru with 72,200 metric tons. Looking at some decreases here: 229,200 metric tons canceled from unknown destinations. So that's really primarily it. The corn market was up 2 when this came out, and right now the market in December corn is up 2.5. Wheat, net sales of 314,400 metric tons for 2015-2016, down 25% from the previous week and down 49% from the 4-week average. Japan took 123,000 metric tons. Yemen takes 47,500. Nigeria takes 30,300. Cancellations of 27,800 from unknown destinations. The reaction in the wheat market was up 3 3/4 before this export report. Right now, the wheat market is up 4 1/4. So let's now go to crop conditions. Came out Monday. Not a lot of dramatic change, but the cotton numbers, good to excellent category, were slightly downgraded. It was 55% good to excellent. Previous week was 56%. Noticeably in Texas, just looking at the state of Texas, 46% good to excellent versus a previous week of 48%. Setting bowls, 73%. The average for this time of the year is 88%, still running behind. Soybeans, good to excellent category, unchanged. No unusual numbers coming out there. Corn, good to excellent, 69%, a slight downgrade. Previous week, 70%. Spring wheat, good to excellent, was an improvement, 70% from previous week of 69%. Let's talk about price movement. The recent price movement in all these markets, we've had quite a bit of movement. Cotton market rallied 578 points over a 3-day period right after last week's crop report. November soybeans sold off $105 a bushel That was over an 8-day period. That also was keyed mostly from a negative crop report. In December, corn had a 44.5-cent sell-off over a 3-day period, also off a negative crop report. September wheat had a 46-cent sell-off over a 3-day period. I think rarely can we say we've seen supply and demand reports come out where it was so dramatically off from what anticipation was, and that's the reason we've had these very big movements. Let's talk about trends in the market. And before we get to that, we talk about it all the time. Let's mention it again. The seasonal tendency in the markets right now for cotton, corn, and soybeans is for in the month of August to see a rally. It takes you toward the end of August, right at the 1st of September, and then typically, seasonally, over the years, we roll over, sell off into harvest. That means a sell-off or a bottom, usually, looking at the numbers, in grains of the first half of October, in cotton more in the area of the last half of November, maybe the 1st of December. Last year, the low in grains was October the 1st. Last year, the low in cotton was December the 1st, or right in that time period. And that's typical. So that's what you need to be aware of. Trends in the markets. When we talk about soybeans and corn, you've really got three things to look at, and all three of them are negative. First, we've already mentioned the seasonal. The seasonal tendency we're approaching is for the market to roll over and start selling off. The low of the year in most markets is during harvest. So that's one negative for soybeans and corn. The other negative is a crop report that was very surprising, that was negative. The other negative for those markets is a very negative tone for commodities. We'll talk about that in just a minute, but that is a negative because if you look at Bloomberg, CNBC, any news service, almost every day they're talking about the bearish commodity market. And it weighs on all markets. It's primarily led by energy markets and metals markets, but it affects all markets. Cotton. There are different factors here. There's positive and there's some negatives. The positive is the crop report was very bullish. The supply and demand report was a surprise. It was bullish, and the market reacted like you would think it would, with over a 500-point rally. But now let's talk about the others. The negatives is the same negatives you would see for soybeans and corn. Seasonals. The seasonals typically roll over the next week and then head down into the last half of November. Will that do it? Will that happen this year? It doesn't. It does not happen every year. It's not scientific, but that's normally the trend. So a negative is seasonals, and the other negative we mentioned for soybeans and for corn, it's the large speculators that had accumulated. These are the funds. They've been long commodities for 7 to 8 years, considering it a hedge against inflation. Many of those have exited the market or are exiting the market. And there's some funds that speculate and can get short that are selling the market. It's a very difficult thing for a market to sustain a rally when the funds that have been so supportive are no longer buying the market. So why are commodities negative? Gosh, it's been over a 1-month period, there was one after the other. It started off with more stability in Europe when they settled the Greek debt crisis. Then we had the Iranian nuclear treaty that came along. After that, the possibility of Fed raising rates. Then just recently in the last week and a half, a meltdown in China with the devaluation of their currency, very negative. And then we've got large commodity funds, as we've mentioned, are now actually selling commodities. It really boils down to two things. Crude oil moving down with overproduction and the dollar moving up. That really sets the tone for the devaluation we've seen in currencies. So what does it mean for agricultural markets? I don't think that agricultural markets will drop as much as these other markets will. I just think it helps set a negative tone for them. I think that you'll not see the same percentage drop there that you're probably going to see in crude oil, in copper, in these types of markets. But nevertheless, it is still a negative influence for the market. So that's really it. We just wanted to go over all these factors today. Hope you have a good day. Hope you'll join us again next week for the E3 Market Report. Thank you.